Good morning. It's Vijay here. Today is Wednesday, 26th November 2025. Welcome to yet another episode of Pre-Market Commentary. So yesterday's movement, the tug of war continues. You got one side, the bears who are expecting the markets to crash because they are highly overvalued and it is not able to take out the new highs. It is going about 26,000, but it is being pushed down. On the other hand, you have the institutional bulls who are predicting much higher numbers, 27, 28 in the next few months. But as of now, it's a stalemate with the bears slightly in the advantage because over last few weeks, the bears have seen that the market has not sustained about 26,000. So, will it happen today and will it sustain? Is a question which is up in the air. But I think, but I'm a biased bull, so there is some hope that we may cross 26,000. But it doesn't mean that we are going to go to 28,000, 30,000 in any hurry. We may still hang around below the all time high, which we saw in September end of last year. So, yesterday there was a lot of hope. In the morning, things were looking good. Sensex was a close to, I mean, it was a significantly positive territory. Same thing with Bank Nifty, same thing with Nifty. Yesterday was the monthly settlement of the on the NSE. So in the last half an hour, everything came crashing down. Okay, so bank Nifty led the fall actually, and however, interestingly, the mid cap index gained about 316 points. After a long time, we are seeing the broader market is at a positive variance vis-a-vis Nifty and Bank Nifty. Usually, it was the other way around. Nifty and Bank Nifty used to go up, while the broader market used to come down. So much so, one very famed investor has made a video where he sings saying that the Nifty and Bank Nifty are making highs, whereas my portfolio is down by 50%. So that is the kind of desolation which is there. I labeled yesterday's post-market commentary as NOA, which means basically people are so bored with the market, they're willing to accept that every day their portfolio will go down. Now, I feel yesterday's movement and day before yesterday's movement, there is a ray of hope. Whether there is a false dawn, we will know in the next week to 10 days. But we can look at it a little bit positively rather than just being, shell shocked and being ready for another decline today. And so yesterday, IT also fell down. IT, I feel, is not really ready for a rally, but there are a lot of large brokerage houses which are pushing for a rally. NBFC saw a strong demand yesterday, so that was very interesting. And so, what did the FIs and DIs do? Both FIs and DIs bought yesterday. FIs bought 785 crores, DIs bought 3,912 crores. Totally close to 4,700 crores was bought by institutions. Who sold to them? The third force sold. As I keep mentioning, third force is a significant factor in the market. The third force doesn't expect the market to really look for bigger numbers, and they have reasons for that. The reasoning I will mention a little later, but before that, the US markets really rebounded strongly, and though Nvidia was under pressure, the AI bubble now has shifted to Google. So Google has now taken over the mantle of AI. So now people are unlikely to look at Nvidia in any positive manner. So it may slip slowly. It may not crash, but it may slip slowly. In the next 2 3 months, you may see Nvidia significantly lower than this based on my analysis. Please note, I'm not a SEBI registered advisor. And if you like this kind of independent analysis, please like, share, and subscribe. We are now above 1500. Let's go slowly but steadily with all your blessings. So tech was down for most part of the time, but later it recovered. S&P recovered, and dip buying was happening. BTFD is happening in the US markets. But how long this will continue, we have to see, because as I mentioned some time ago, before Thanksgiving, the market is strong. Leading to the Thanksgiving, which is tomorrow, is Thanksgiving. So today also one should expect strong markets in the US. After Thanksgiving, generally the market stabilizes, and December also is generally a good month for the markets globally, including India, many a time. Not always, but many a time. Now, interestingly, this Ukraine-Russia deal is supposed to be in the final stages. So the oil prices are falling, which is good for our refiners. Oil yesterday, in fact, Brent crude went down below 62. In fact, it went down to $60.89 per barrel, a far cry from the $100 which we saw last year, or even $125 when the Ukraine-Russia war started. So we are already half of what we saw when the war started. And if the peace deal is signed, I'm sure things will only get better in terms of the prices of oil going down, which is good for the economy. Gold and silver are fighting a grim battle between the bulls and the bears. I am on the side of the bulls. As I keep saying, we hold more than 40% of our portfolio in gold and silver, which is equivalent to holding in cash. Now, coming to particular stocks, we are seeing NCC has won a big order, so that may be in focus. IGL has tied up with they have a 50-50 JV with the CID consultants for a compressed biogas plant, so that may be positively affected. United Breweries has launched a new Heineken Silver, a new brand, a sub brand, so that may also show some positive movement. And HCL Tech has signed some collaboration. Zydus Life Sciences got a US FDA final nod for heart and drug for heart and BP treatment. So there should be some interest there. Then you have LG Equipment. Of course, LG Equipment has bought back shares. And then on the negative, which is where the worry is and where the third force is very clear that the markets will not go up, is because of the corporate selling into the market. And now you have a block deal for about 7,200 crores by Bharti Airtel. Now, this will invariably get absorbed by the mutual funds, which means the money which poor retail investors are putting in mutual funds, SIP or direct investment, is going to fund the Bharti Airtel promoters. So that 7,200 crores is huge, but that is how things are. Then there is very interesting analysis by one of the analysts of Equirus Capital, where he says the new labor code will affect lots of companies which are in infrastructure, because most of the labor which is there in the infrastructure companies is not formalized. Once you begin to formalize labor by the labor code, the new labor code, then the cost for the infrastructure companies will go up. And that may have a big bearing on the prices. As it is, the infrastructure companies operate on very thin margins. Now, this new labor code is going to shave off some more margins from their, bottom line. One needs to be very careful. So when I say NCC is doing well or NCC got a big order, at what cost is what one has to look at it. Then there is another analysis on shipping from the head of GE Shipping, who says that if the Ukraine-Russia war agreement is there, if it concludes, then there will be a tanker market will decline. The rates will decline, which means it will affect companies like GE Shipping. So one needs to be very careful. He says that tanker rates were about 10,000 to 15,000 per day before the Ukraine war started. Now it is 50,000 per day, and it may come back significantly. It may come down significantly lower. We don't know whether it will come back to 10,000, 15,000 per dollar per day, which was there prevailing before the war started. Then there is some hope for the steel industry, where the steel secretary yesterday in an interview with CNBC said that government decision on safeguard duty is expected soon. He did not say when, he did not say what kind of quantum, but is expected soon. So that is something interesting for the steel company. So today the bulls are all charged up, and I think the Gift Nifty is talking of a 80 points rally, but we don't know how it will finally play out, because the third force is very active and the corporates are selling left, right, center. So one needs to be very cautious. As I said, we are 80% bullish, 20% bearish. Whatever you do, I hope it is successful. Thank you for joining.